Crowd or deal isn't quite as simple as putting up a website and watching the money rain in. To be successful selling your deal online, you have to engage in extended, consistent marketing. My guest today, Lisa Canning of Crowdfund Capital Advisors, talks about why this is important and what she's seen. Welcome to the National Real Estate Forum podcast, episode 205. Thank you for joining me today. I am Dr. Adam Gower, and this is the Crowdfund project at nreforum.org, where developers, investors, and industry leaders share insights that you can use to raise capital and invest in crowd-funded real estate deals. The world of crowdfunding real estate deals is one in which a third layer is overlaid to the process of investing. At the basic level, of course, is the deal itself that has to be carefully underwritten. Next, you have to be sure that the sponsor is capable of delivering on the deal. That's step 2. But now, if you invest through an online marketplace, you also have to be sure that the platform's infrastructure and systems are robust, and that they are delivering on the promises that they make about the due diligence that they do. Not only that, but you also have to rely, if not completely, at least in large part, on their marketing skills. Lisa Canning of Crowdfund Capital Advisors, my guest today, has been brought in to fail deals, to do triage, and her insights are telling. Thanks for listening today. Crowdfunding deals is the new way to find capital and to invest in real estate, but it is a science requiring high skill and diligence across multiple disciplines. Fortunately, you are in exactly the right spot to do that here at the National Real Estate Forum. Apart from the podcasts, I've put together a high-level overview of how you can raise money and invest in real estate in crowd-funded deals that you can access completely free at the nationalrealestateforum.org website, nreforum.org/primer. Lisa Canning is Crowdfund Capital Advisors' Education SAR. She is a recognized speaker at home and abroad, and when she is not helping folk to raise capital through crowdfunding, she plays the clarinet. Be sure to listen through to the end of today's episode for a delightful sample of her musical expertise. Maybe you could tell me a little about what you do at Crowdfund Capital Advisors and a bit of your background.
Sure, I'd be happy to share that with you. My background is all in small business and, working with companies that are probably up to 20 million in sales, who are often mom and pops or family-run businesses or on a steady pace for rapid growth, but not necessarily scalable entities.
Okay.
And Crowdfund Capital Advisors, on the other hand, comes from a background of all venture capital and large deals and scalable, sellable, very, very high net worth business. And one of the things I think that's brought us together is the fact that we basically bridge the entire crest of what's out there and the needs that people have.
Tell me more about what Crowdfund Capital Advisors does, right, in the crowdfunding space, and particularly to the extent that they do anything in real estate. Tell me a bit about that.
Well, Crowdfund Capital Advisors really was born with two entrepreneurs, Sherwood Neese and Jason Best, who really felt, especially after the market crash, that businesses were really having a tough time raising capital. And having gone through trying to find capital themselves for their own different entities, they realized that this was something that they felt inclined to want to take on because they really felt the entrepreneur's pain. So CCA set out to change that, and it took them not very long to be able to get the Jobs Act in place and to legislate to have that occur. It took a long time for the SEC to finalize those rulings because the Jobs Act was passed in 2012 and didn't become 16th of 2015.
Right.
However, what they spent their time doing in that period of time while the U.S. couldn't make up their mind was trotting around and advising over 41 countries on how to develop meaningful legislation and ecosystems that support the financial growth of entrepreneurs. And so I think that it's remarkable what two people with their own money are willing to do to try to help people like me and people who are also building very, very scalable large businesses to do better, which is access the thing that every one of us needs, which is money.
Right. So I know it's a fairly obvious thing, but can you give me a synopsis of exactly what is crowdfunding? That's a very 101 question, but as a foundation for what we're going to be talking about, it might be interesting just to hear your perspective on that.
Well, crowdfunding is a way to do something that we've done forever. It's nothing more than thinking about passing the church hat, except that it comes in many forms. It can be through the form of a donation, like passing the church hat. It can come in the form of a rewards-based prize or something you get for the money that you give, and it can come in the form of an investment. And up until Crowdfund Capital Advisors worked on the Jobs Act, unaccredited investors, those that did not have high net worth, were not able to access those deals that typically high net worth individuals were able to. And it opened up a pathway for both equity and debt investing that was not available to the common person.
Now, was this something that you had come across in your world, in the small business world, was a problem with access to capital? What drew you to CCA? Yeah.
Well, that's a really good question. So my trajectory was, I'm a musician by training, a clarinetist who was on a pathway to be a performer and decided to start a business. Instead that grew really rapidly, but was definitely still in the small business category. And I discovered very quickly that I needed access to capital and found myself every 2 to 3 years flipping banks because the one who gave me the $1 million the last wouldn't give it to me the next time. And my growth was actually a problem. And yet I wasn't considered angel or VC worthy because I didn't have the returns that either we're looking for or the growth trajectory. And so about 10 years ago, I sold a big chunk of it off and decided that it was time to try to look at entrepreneurship as a ecosystem that was becoming an industry. And I poured all my energy and time into trying to build out connectivity at a higher level than what I was, where my network was in the music industry. And it actually led me to launching an incubator and accelerator in Illinois to help small business owners. And that led me to being recognized for my curriculum design by the White House. And so I went to Kenya and was part of the 6th Global Entrepreneurship Summit. And that led me to CCA, actually, because what crowdfunding really needs is education, because so many people out there think that it's as simple as registering on a portal, getting approved, and then the money will start pouring in. And
crowdfunding, right? That's what you think people.
Correct.
That's what people kind of assume. So what is the reality then of crowdfunding? How does it work? What are the nuts and bolts then for a small business? But my perspective is primarily real estate, but it applies similarly.
Well, I mean, it depends on what bucket you fall into, if you're an accredited or an unaccredited investor. If you don't have a high net worth, then Title III, which was passed by the SEC on May 16th, is the place where you live. And that allows you to raise up to $1 million or to $50 million. The tricky thing is that you can't raise more than $1 million under Title III. And so, recent trends are supporting some parallel tracks between Title III and Title IV because in real estate, it's pretty easy to get to $1 million. And so while there has been a record number of investors getting involved in crowdfunding, after the year one just ended, so quarter 4 showed that they have over 700 investors in real estate that are committed to crowdfunding, which is great. Crowdfunding.
Hang on. Sorry, 700. I missed that. 700. What was that number exactly?
That the industry groups with the most investors, real estate has over 700.
Has over 700, Title III Reg CF investors? I'm not quite following that. Is that people that are raising money using Reg CF or?
That's correct.
Okay, so 7 money using Reg CF or?
That's correct.
Okay, so 700 entities or individuals across the country are using Title. It's called Reg CF for crowdfunding, part of the Jobs Act, to raise capital for up to $1 million in real estate. That's what that number means.
That's correct.
Okay.
Yep.
That doesn't seem that many. Or is it?
Well, it's not yet, but, steady, healthy growth is a recipe for success. Feeding bullets are a recipe for fraud.
Yes.
Right?
Okay, right.
right? And so although it's not the magic bullet that some people thought it was going to be, it's very community-based. So It really does build upon the landscape of where you live. And it requires relationship building at a different kind of level because, real estate in the past was largely very large investors coming together to pool money that people didn't have access to. And so that's really opened up for the unaccredited investor in a way up to $1 million, which gives them credibility and the ability to also find accredited investors as well and do both at the same time.
So
go ahead.
Well, I was going to say, if you're a Reg CF issuer, typically what's the process then for raising $1 million? So you've got a small real estate deal. Maybe you want to renovate an apartment building that you need $1 million for and some debt, or it's a house flip or whatever it happens to be. What's the process for somebody wanting to raise that money, and how is it different from the old days when you called family and friends and went to the country club?
Well, first of all, most people who have an attorney and an accountant think of those people as their first call, and they should be their first call. However, because crowdfunding has special filings and special ways of accounting for the money, you really want to be working with people who have an experience with crowdfunding. So you need to make sure that your accountant and attorney either has been trained in it or that they're willing to help you connect to people like Elenoff, Grossman, and Scholl, who are attorneys in crowdfunding, crowdfundcpa.com, who are very skilled and honed at being able to properly advise you about how to get your paperwork in order. But before you ever get your paperwork in order, you have to actually decide what kind of portal you want to go to.
What's a portal?
Very good question. So to be able to raise Reg CF money, you have to be able to do it. You have to do it through a portal. The SEC wants to make sure that there's complete transparency and that you can be seen what you're investing to put it in a place that is public, but yet not without registering, easily dispersed. So there are portals popping up all over the place that will allow you to go online and look at deals if you're an investor, as well as post deals once you have been approved by that portal. It's not as simple as just putting your material out there. You actually have to have completed all of your paperwork properly, filed properly with the SEC, completed all the proper registration depending on what you're doing. If it's Reg CF, you need Form C with the SEC to be complete, and you have to have the portal accept you.
And what kind of time scale is involved? Let's say I find a deal here in town and I want to put it into escrow, and I'm going to need $1 million of equity. How quickly can I turn that around in a Reg CF scenario?
When you say turn it around, you mean?
In other words, be out there raising money. Yeah, be out the F scenario.
When you say turn it around, you mean?
In other words, be out there raising money. Yeah, be out there from zero to talking to the right attorney and the right accountant to getting up presumably a website or a page or however it works on a portal and be soliciting for contributions for investors in the general marketplace. How quickly is that turnaround?
That turnaround isn't, if you're using, somebody who's familiar with crowdfunding to help you with your accounting and a lawyer, not very long, but that's actually not the problem. The problem is that if you don't have a chunk of that money, probably 30-40% of it sorted out where it's going to come from before you ever start to raise, your campaign's going to flop. You actually have to have pre-designated. The SEC has softened this year just a little bit on allowing people to ask if they would be willing to commit funds before they actually seek to raise them, because it's very, very important that you build traction and momentum. And a lot of times in the past in real estate, you go to like family and friends and you just figure out who's going to give you what sum of money. And, but in this case, you're trying to raise a lot of money from a smaller dollars from more people. And so to be able to do that and to have people you don't know or that are once removed from who you do know requires a lot more effort before you ever get started, which some people have criticized crowdfunding for. But the flip side is that how do you build a portfolio where you're able to grow what you're able to do with more people if you don't invest the time into getting to know them so that you can build a much larger investment pool.
Okay, so this is what you do, right? Isn't it, Lisa? You advise companies on how to build funding effort. Is that right?
Exactly. Correct.
Okay.
My job is to help companies understand, and I have unfortunately seen very successful real estate brokers and agents, investors and borrowers go out onto sites, plunk down their hard-earned money, spend $15,000 or $20,000, who have done real estate deals all day long, and screw it all up because they don't understand that going to the same old people that you've gone to, they may or may not be interested in sharing that pot with a variety of unaccredited investors. It's a different market that you're shooting at and a different approach that you have to take if you really want to build a large number of investors for your deals.
So what is the key mindset then going into this? If you're an experienced real estate professional that's done development in the past and you want to go out and do some crowdfunding for your next deal, how do you need to be thinking? How do you need to be approaching?
You need to start way earlier. Before you ever worry about the portal, you need to start figuring out how you're going to position your marketing and your conversations with people so that when you actually find that property in that deal or you're raising money for that fund, that you know who to call upon as early investors, as opposed to hoping that everybody that you know in the past will simply jump on board once you posted.
And what are the mechanisms for doing that? Are you talking about having an active Facebook presence and Twitter account and Instagram and LinkedIn? And is that what you're talking about? Developing a social media presence?
It's both social media presence development. It's presentations like podcasts. It's live Facebook. It's video. It's networking. It's really putting yourself in a position where you're asking the right people long before you ever need the money in advance. Really putting yourself in a position where you're asking the right people long before you ever need the money in advance what their interests are and if they are potentially the right candidate for the kinds of projects you're working on. And it's not something, I think we think very short term when we think about a sale or we think about putting a deal together. And it's something that takes a lot more of commitment to be able to do. But the long-term benefits are great because of the pool that you build up of potential people to invest. And, you know, as an investor myself in real estate, I know that when I was purchasing a building for one of my businesses, a few people that had helped me invest before were not interested in the kind of that particular project. And it made it very challenging then to figure out who was going to give me that money. And not every investor that you've used in the past will have the same appetite for the things that you're interested in. And so you have to be able to create a market and a pathway for all of the different things you want to do with the right people.
So you have to create that when the time comes to raise money, there is this sense of familiarity, at least at a certain level.
Right. We only do business in the end with people we know, like, and trust, and we certainly don't give people money that we don't know, like, and trust.
Okay, so now looking at it from another perspective, from the investor perspective, here I am, I've got a few dollars that I want to invest in real estate. I can't find a home because there's no inventory or prices are too high, and I feel left out of the real estate rush, and I can't invest in anything. So, and I go out and I look at all these websites, and there are a ton of them online. It might be a local person who's raising a few dollars to do a deal, a few $100,000 to do a deal somewhere. It could be local. It could be halfway across the country. How do I protect myself from making a mistake?
Well, you have to do your homework. You have to thoroughly read the prospectus. You have to thoroughly read the offering. You have to completely have all of your questions thoroughly answered. Investing is a risk, and you can lose all of your money. And, the part of the job of the portals, which CCA ensured with the legislation they passed, was transparency, that not only are they collecting data so that in the long run people can not only catch, there has been actually no fraud. No portal has ever launched or been fraudulent yet because the SEC is so careful with it. But the bottom line is that you are responsible for your investment. And while some of the minimums have dramatically dropped for unaccredited investors so that you can, on Fundrise, I was looking at Fundrise today, I think I can invest $500 in a real estate deal.
Right.
$1,000. That's amazing. Where could you do that in the past? Right? But still, it's $500 or $1,000 of hard-earned money that if you are not prudent and careful, you could lose.
Together a summary of today's episode, as well as a downloadable transcript in the show notes at nreforum.org/Lisa Canning.
You know what's interesting to me about this space is it seems that we have a confluence of three industries. One, we have a strictly regulated framework, so you've got to be expert in that. Second, you've got to be expert in tech, right? Online marketing. So there's nothing trivial about being an effective marketer online. And then thirdly, you've got to be a real estate expert, right? So it's almost as though who has all of those three skills?
That's why you hire professionals to help you who are knowledgeable in the space. And while the person investing should be knowledgeable about real estate, if you're working with the right attorney and the right accountant and the right person to help you with online marketing, then you've got the right team. And the right person to help you with online marketing, then you've got the right team, right? It's no longer good enough to have a set of skills and operate with those skills in isolation in your industry if you want to build a community-based, broad-based portfolio. And I think crowdfunding is a modern solution to an old technique that increasingly our world has forgotten, which is sharing your knowledge and investing in your community and partnering with people that you know and their friends.
So we've talked a little bit about Reg CF, which is the up to $1 million scale. Mm-hmm. But you also talked about what's called Title 4, which is Reg A+. Correct. And then there's also Title 2, just to be completely confusing, but I think I'm getting used to it now. Title 2 is what was Reg 506C, right, which is the ability to advertise to 506C. Right, which is the ability to advertise to unlimited, accredited, well, not unlimited, but to advertise publicly to accredited investors. So can you describe the difference a little bit? Now, we've talked about CF. What's at the higher end of the spectrum now when we're talking about Regs 2 and 4, or Title 2 and 4?
First of all, just for your listeners, there is available online at www.thecagroup.com. The differences between Title 2, 3, and 4, which anyone can go out there and download. So while we're just kind of skating over the top, feel free to go do that.
Okay.
Title 2 doesn't allow for any unaccredited investors at all, whereas the original 506B actually allows for up to 35 of them. Which is
That's right. So so the upgrade to 506 can bolt on a Reg CF if you want to as well, but you have to operate under different terms, right? Right,
correct. And a lot of people are working with Title 4 Reg A+, and Title 3 Reg CF, right? Which there's two tiers in Title 4.
Okay.
The Tier 1 allows you to raise $20 million maximum. And Title 2 allows you to raise 50. So in Tier 1, there are also no limits to the number of unaccredited investors you can have, whereas in Tier 2, only 10%, there can only be 10%.
Okay, and there are also different regulations as to how you evaluate your investors. And there's all kinds of different regs that become more burdensome with the Reg A+ Tier 2. But how are people using that to raise money? What kind of structures are they using to benefit from Reg A+?
Quite honestly, one of the reasons why I was interested in taking your call, first of all, it's only been a year that Reg CF has been going, and the deals that I've been involved with all I was brought in after they had failed.
Really? So in what way did they fail, Lisa? We're talking Reg A+ now, are we, or are we still talking about CF?
Both. They were both. And basically, from the perspective of the real estate investor, they really thought that the network they had used in the past to go to invest would simply just step up in a crowdfunding environment and have no reservations whatsoever. And it just didn't work. They weren't comfortable because they hadn't discussed with them the notion of bringing in unaccredited investors or what that looked like and how it might affect their deals. They also didn't use a good crowdfunding attorney or a good crowdfunding accountant. So they didn't set up their prospectus in a way that accredited investors their actual documentation wasn't good enough to be able to reflect what their intent was. And so when people went to the portal and registered, they felt like, what is the benefit to me of doing this? I can't see how, if I'm going to be having unaccredited investors come in, how this is going to work out. Why are they getting the same? They saw it as the same. They weren't feeling like there was enough in it for them to put in larger sums of money. And so, and because they weren't raising money quickly, because there was this hesitancy and they weren't coming in right away and getting that 30 or 40% down, the deals died much more quickly because people then thought there's something wrong with this.
That's really interesting. I mean, it almost sounds like if you have a close relationship with somebody that you have in the past raised money for a real estate deal, and then suddenly you try and put the next deal up online, you're distancing yourself from them in some way. I know that it would rub me up the wrong way, right? If some other deal for you, log on here, please, and fill in the blanks. So wait a minute. Last time you bought me lunch, right?
Especially if you've never talked to them about it, especially if you just made the assumption that they would do it because they've always done it in the past. It's a huge disconnect in understanding that your ability to sell real estate and the people you know does not transcend the medium you're using. You have to actually educate people and get people comfortable with what you're doing. And you also have to be exceptionally good at communicating what your intent is so that it's crystal clear because, it's a controlled, this is taking over the tombstone ads. You can only go online to go view this, which means that it has to be right. And only in extremely controlled circumstances can videos be created. So it's not that easy to share the information like you would over lunch, here, take a look at this, or, let me show you quick. It's not done that way. And so because it is a shift in how business is done, investors have to be taught how to become comfortable with that, and their concerns have to be addressed before you ever get to the point where you've invested in putting everything up online.
Yeah, it's really interesting. So what have you been doing then? Have you been helping these developers reposition themselves, or these dead deals, or what do you?
Exactly. So the thing is that a dead deal is a lot harder to rectify than one that never got started and is building momentum. So the trick is that you kind of have to pause and regroup and sort of back off because you can't just dive back in. The crowd is very smart. Your existing investors and friends and family are very smart if things don't feel like you're positioned in the right place. So essentially, it's like starting over and pausing. And it's only been a year, so this hasn't been the only thing I've been working on. I've been working on a lot of other kinds of not real estate deals, right? But there's a really good InvestorJunkie.com has a really good portal comparison that just came out a few days ago that I thought would be worth letting your audience know that they should go take a look at.
Okay.
There's not that many portals that are yet open to just unaccredited investors, but there are a few, and it really spells out very clearly what you need to do. I think the biggest question is it goes back to your strategy for your overall business and what it is you want out of your real estate investing. One of the problems I saw in the last deal that I worked on is that the team that was working on it, one of them really just wanted a couple of investors and to close deals and really didn't want anything to do with crowdfunding. And the other two guys really wanted to use crowdfunding. So if the people that are on your team are not all of the same mindset, you can't crowdfund, right? You have to come all of the same mindset. You can't crowdfund, right? You have to come at crowdfunding with a mindset that you want to bring the masses involved in your deal, and that if you're going to change how you do real estate, use it as a path, a channel, not as the only way that you build your portfolio unless you're starting from scratch and that's how you want to do it. But it's going to probably be different investors. It's going to look very different to the people who invest in crowdfunding, has to look very different to the people investing in crowdfunding through portals than it does the old-fashioned way.
Okay, so now you've got two options. You can either, go ahead and hire an accountant and an attorney and put together your own website and your own issue, right? You can put together your own deal online and assemble the team that's going to help you through it. Or you could go to one of the websites that intermediate these things, right, that actually do it for you. And they charge a fee. They've got the infrastructure in place. Who are those websites?
Investor Junkie. It depends on who you're looking at. For example, Lending Home charges 1 to 2.5%. Patch of Land charges 10% of the interest fee. It depends. They're all different, right?
Right, but these are ones that you go to. So these business models, they're different. So instead of being a developer who needs some equity, who puts together the whole program themselves to go out to the crowd, you can go to somebody like Patch of Land or Realty Mogul or Realty Shares or Peer Street or any one of these, and you can say, look, I've got a deal that I want to crowdfund, and they will do the work for you, right? They sit. So explain how that model works, will you?
Well, you have to submit your documentation. They're going to decide if they will accept you. It's not just a slam dunk that you'll be taken on the portal. There's a fee that you have to pay to be accepted on that portal, and then there's a fee. And so, it goes back to what you're trying to accomplish and whether that portal is the best positioning for you. A lot of times people think that the portal will bring them the investors, which they won't. So far, the data has proven that investors typically will invest in a deal or two in a space or a project or that they know really well, and then they will not invest again, and they are not likely to look around. And so assuming that the portal will bring you investors is not a good decision.
So you still have to do your own marketing to ensure that your deal will be funded, even if you go to one of these intermediaries that you're calling a portal. But I know there's a different term for a portal as well as the directly regulated ones. But in this sense, that you go to somebody like Peer Street or Patch of Land or whoever it is, they'll do all the work for you, all the regulatory or Patch of Land or whoever it is. They'll do all the work for you, all the regulatory oversight, and they'll guide you through the process, and they'll put your deal up on the website, right. But you still have to do your own marketing.
Yeah, it's just a vehicle to get the job done. It's it's not going to give you the money. And too many times what I hear out of attorneys is that their clients think that it's just once they get through all those hoops that it's just magically going to work.
So where's the data on? Where's the industry data on how these sites are performing? Well,
the best place to get it is from CCA. CCA is building real-time data of all the deals that are done, and they are doing it quarterly. And you can learn a tremendous amount by signing up for their data feed that next they just completed. You can still get the year-end for group.com. It's just a couple $100 to be able to see where all the deals are being done, how much growth there has been from quarter to quarter, where they see opportunities, where the holes are. Very much worth that money if you're serious about crowdfunding. And then part of CCA is also the not-for-profit arm to try to help develop this marketing effort. And so we've launched a business called Sana's Kitchen that's just about to go live, that incorporates high-tech and low-tech together to be able to really increase investor connectivity through digital marketing and social media. And so we help real estate agents find new channels to market, new investors, and improve their communication strategy for crowdfunding.
You said real estate agents. Is that what you meant? Or real estate developers?
Real estate developers. We see agents in the crowdfunding space as well. A variety of different people are in crowdfunding. How
do agents use crowdfunding?
Sometimes they have borrowers or investors who are looking to try to buy property, and so they advise their clients. And so increasingly they're involved in the space.
Advising on a particular investment.
Exactly.
Oh, that's interesting as well, huh? You can almost create a cottage industry of that, right?
Absolutely.
Very good. Well, I'm very grateful to you for your time today, Lisa. It's really a pleasure talking to you. Can I ask you one final question? I'm very interested in your clarinet business. My father gave me a clarinet. He used to play in a jazz band, I think, 100 years ago or so. And So I actually learned to play the clarinet extremely badly when I was at school. So tell me about your clarinet sideline. It sounds really interesting. I can still smell it in my memory.
There's always hope. Lots of adults come back to music. There's always hope. Lots of adults come back to music.
So what's that? That's a lovely little sideline you've got there.
Yeah. Well, I've been very focused in the recent years on trying to create jobs, and so the music industry needs more of them. So I've been developing musicians into consultants, and the sales model's getting very flat with Amazon. So we're working with a few different manufacturers that we're selling direct, manufacturer to consumer, and we produce really high quality instruments. My name has been associated with this business for a long time, and so I have a very good reputation, and so it's a lot of fun. It's shocking. Just like there is property everywhere, there are clarinetists everywhere. It is shocking how many people.
Secret clarinetists everywhere. You would never notice when you look at them, right? This is what his secret vices in the background.
Strangest thing.
Vices in the background.
Strangest thing.
And is there anywhere, I presume you play, so is there anywhere that online we can hear a few of your notes, maybe?
Yeah, you can hear me. I've got a few recordings out on my main shop page, which is lisasclarinetshop.com. If you go out there, you'll definitely.
3 key takeaways from Lisa today. 1, the new army of online marketplaces has to blend multiple industry skill sets: real estate, regulatory compliance, and marketing. 2, do not rely upon anyone but yourself for your own successful capital raise. And 3, allow for more time than you expect in developing a strong, consistent, and effective marketing campaign to build a relationship with potential investors before you ask them for money. You can get a transcript of today's episode at the nationalrealestateforum.org website, nreforum.org/Lisa. There are also useful links to sites that Lisa mentioned today. In the next episode here at the Forum, my guest is Brew Johnson, who is founder and CEO at Pier Street. The conversation with Brew is particularly pertinent not only because Pier Street employs a novel investment strategy and some interesting stress test methodology, but also because another of my guests is Alex Rampel of Andreessen Horowitz, a financial backer of Pier Street and one of the key venture funds that has invested in the crowdfund real estate space. Be sure to subscribe to the series so as not to miss either of these conversations. I've installed links on the website at nreforum.org so that you can subscribe on whichever podcast platform you use. Just go to nreforum.org and click on one of those links. If you want to become an expert in raising capital and investing in nationalrealestateforum.org. Thanks so much for tuning in today. And thank you also to Lisa Canning of Crowdfund Capital Advisors for sharing your time with me today. Until next time, this is Dr. Adam Gower signing off.
Bye.